You are not allowed to leave your home unless you go, and only to go shopping. And if you do not have a reason to go shopping, you should not be leaving your home. No visitors are allowed in under any circumstances, because you can get a fine and you can get prosecuted. All restaurants are closed. Everything is closed except stores. So we are very far away from normalcy.
Okay, well, the Maomao is back over there. We just had a question. Go ahead, sir. You take over.
Yeah. So Scott, are you here?
I am here now.
Everybody.
Sorry, I've actually been here since 10 past, but I got muted and blocked my camera and no access to get back on.
Oh no.
Yeah. No, because you were in earlier you were not in earlier panels. So Scott, you're all the way in South Africa, correct?
Yeah, correct. I'm in South Africa, and I run a company called Wealth Migrate. We help people from all over the world, primarily emerging markets in Asia, Africa, India, Southeast Asia, etc., invest into first world assets in England, Australia, and America. And we've got members in 133 countries and done about $600 million. So just a quick intro as to who we are.
Wow, really cool. All right, so let's start with you, Paul. So you've lived and you've worked in Asia for quite some time. Could you talk about how, I think when we talk about a digital economy and a real economy, the supply chains that we kind of take for granted in our highly globalized society, I think they're really kind of coming to the forefront now. Could you talk about how the role of manufacturing has changed in Asian economies over the years, and how much of an impact these disrupted supply chains will have today?
Well, yeah. So you go from all the way from e-commerce and shopping online, but which has basically completely been taken over in an e-commerce fashion in China, and I would say throughout most of Southeast Asia through Tokopedia, Lazada, Tencent, JD, Alibaba, and several local companies who are doing that from the point of view of rideshare, Gojek, and so forth. But in talking to clients recently, what we're seeing is basically a gumming up of a vital supply chain called food, right? And so you can't, we can't eat, through e-commerce. You can't eat through your computer, and so there is a fundamental problem that's developing in all the ports throughout the Far East, which is an incipient buildup. Because we just don't have the people at the ports and people in trucks and so forth because of the lockdown in Jakarta, Manila, Singapore. Thailand is in complete lockdown. Most of the airports are shut. And so in terms of food stuff arriving by plane or by ship, it's just becoming increasingly difficult to get this stuff roaming around. There's a great startup called Cargo in Indonesia, done by two guys who split off from Uber. And they're doing some fascinating stuff in robotics in Indonesia to try to minimize human interaction in the distribution of food. And so they just finished an A round. And so I think we're going to see a lot more of this, but I think it's going to be hard to get away from something that's so fundamental to the entire Far East lifeblood, which is the physical delivery of fruits, vegetables, pork, beef, chicken, and other foodstuffs. And so I'll leave it at that for the time being.
Great, thanks. Yeah, so I'll look at another side of this, which is, this is a fintech conference after all. So Robbie, you recently published a paper with the SUSS, the Singapore University of Social Sciences, looking at ICO regulation. And you found that, just kind of paraphrase your paper, you found that regions with clear ICO regulations, such as Singapore, also tended to produce more high quality projects. So given that given that one would think finance is less affected by the lockdown, do you see the financial sector in Asian countries being a driver of growth during the pandemic? There, Robbie, you muted? I think you're muted.
He's saying can I be unmuted? So whoever's in charge, someone is muting.
The host was muting me, so apologies for that. Anyways, yeah, so look, I think this whole crisis is going to lead to a lot of discussions about how to improve capital formation. I mean, yes, the paper I published regarding the Singapore Open Digital Token offering regulatory model certainly shows that allowing projects that are sufficiently decentralized to engage in open digital token sales doesn't necessarily lead to a Wild West environment. I think there's sometimes a perception, but that model can lead to that, and that's certainly not the case. That said, I think the broader takeaway, just beyond only kind of token sales, is that there's you've already seen, relative to this time last year, VC funding in mainland China has been cut by about half. In the U.S., capital, you're seeing the VC scene also significantly pressured. I think globally, and there's just capital regulators and policymakers are going to really have to think about how to get capital markets back online. Certainly, there's going to be a lot of funds that are trying to take advantage of this downturn to find good deals, and that's ultimate. I mean, that funding is going to be very essential to keep companies online. But I do, I do wonder to what extent technology and new means of capital formation can be used to kind of soften the blow. And even if that's only in a modest, mild way, I think it is something that regulators should consider. I mean, historically, these types of intense events have sparked reforms. I mean, if you look at the history of banking regulation in the US, or look at, frankly, the history of banking regulation in China, it's generally crises that have spurred substantial reforms. So, I mean, putting, obviously incredibly tragic events of the last few months from a policy perspective, one should be, one would hope that regulators take advantage of this situation to implement reforms that are going to soften the financial blow. And Singapore, even in many ways, has on certain levels done that in this digital token landscape.
Gotcha. So it's kind of similar to what we looked at on the last panel, where really kind of an opening up of markets and increasing, well, just more regulatory clarity might help in driving a recovery or driving more growth.
Yeah, I mean, the pressure to act, right, has increased. I mean, when there's only so many levers you can pull, and if some of the demand levers and people going to the store, if these macroeconomic factors are pretty bleak, one lever that can be pulled is that's a supply side boost is regulatory reform, and that spans a number of sectors. But certainly, I think you're seeing that China's already been accelerating some financial reform efforts just in the last few weeks. I think in a number of jurisdictions there will be a tendency towards perhaps engaging in some of these supply side regulatory reform measures, particularly in the capital markets. That would it is one way. It's a regulatory reform stimulus can make sense in these circumstances.
Right. Yeah. So on the topic of investing, so Scott, you've built one of the most valuable assets in the business at Wealth Migrate, which is your business, which is a deep book. If I understand correctly, it's a deep book of Asian investors, and so you've been able to match those with your deal pipeline. So can you talk about how this pandemic has affected the investors and the projects that you're working with?
It's an interesting one. I suppose the easiest way I'd describe it is that I started investing internationally in 1999, and I helped about 2,500 people buy houses or apartments in England, Australia, America, and South Africa up until 2009. And I met two US dollar billionaires in the middle of the last crash. I was in Bondi Beach, Sydney. And I remember asking them and saying, what do you invest in? And they said, medical buildings. And although I've got all the degrees and blah, 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 I'd never ever thought or heard of medical buildings. No one had ever told me about it. And I remember saying to them, why medical? And they said, well, think about it. No matter what happens in the global economy, people need doctors. I was like, that makes sense. Secondly, doctors never leave their premises. And thirdly, doctors are very good at being doctors, but they're not good accountants. So they sign very good long-term favorable leases. And back in 2009, I remember sitting there with all my experience and degrees and everything thinking, why has no one ever taught me that? That's the most common sense thing I've ever heard. And so I said, how do I participate? And they said, no, it's easy. There's 8 slots of 5 million Australian dollars each. They raised $40 million. And today it's worth about $700 million on the Australian Stock Exchange. We launched Wealth Migrate, like you said, in 2013. And since then, we've been helping investors, and a big chunk of that out of Asia, like you said, invest into primary assets like medical buildings. And what's interesting is that in, one of our primary sectors is in England, in America is medical buildings, and in England is aged care. And in both of those sectors, they're very economically resilient. In fact, 2 of our medical centers, one in Atlanta and one in Texas, actually have got COVID licenses, and so are now busier than they've ever been. And, so it's a great question. How does it impact the investors? When you're looking at real estate, real estate doesn't work in 6 to 12 month cycles or crises. And actually in times like now is when you find real opportunities. But the most successful investors focus on predictable income. And they look for asset classes and even within asset classes that are predictable. And the last thing I'd say that I know our investors enjoy is that they also diversified across assets, across partners, across countries, and across currencies. So even when there was Brexit, which was the last crisis in England, they don't have all their money in one place. And so the simple answer is that I believe technology is now allowing investors the ability to do what the wealthiest have done for centuries. And it makes you a lot more economically resilient in these times of challenge.
That's really interesting. So it's almost like you're saying, well, it sounds like you are saying that technology is letting basically anyone hedge their risk across a pretty diversified portfolio, which I think was pretty crucial in this recent market downturn.
Well, look, in simple terms, I mean, I've helped hundreds of people buy houses in America. To buy a house in America, you've got to fly to America, you've got to set up an LLC. Because of the Patriots Act, you can't open a bank account unless you literally walk into the doorstep of an American bank. And as a foreigner, there's a very good chance that bank account will be closed down. Trust me, I know. Wells Fargo's done it, Bank of America's done it. And so when you take all of that complexity, you can't get a mortgage in America if you're a foreigner. In fact, they don't even call you a foreigner, they call you an alien. And so you need $100,000 no matter what to just get started. What people love about the platform and using technology is they can invest in 10 different deals, $10,000 at a time in 10 different deals, 10 different, maybe it's 10 different states, maybe different countries, different asset classes, different currencies. And yet they don't need any tax, they don't need any structuring, they don't need bank accounts, it's all taken care of. So it makes it really simple and safe for people. And yes, they can now get diversification without the hassle.
Right. So yeah, we've mostly talked about the current state up to now. So, I want to look forward a little bit at what happens when everything goes to quote unquote normal, which it won't, because things are going to be different going forward one way or another. So Paul, I want to ask you about a topic that you've written about at length. So you've just published a new book titled The Race for 5G Supremacy, where you talk about the importance of state investment in new technologies and how well a job these Asian countries have done in investing in these things. So how do you see new technologies impacting Asian economies going forward? And do you see them becoming new drivers of growth?
Well, so yeah, the theme of the book was basically all about what we have seen China do, what the US hates about what China is doing and has been complaining bitterly, and what I anticipated the US government would do as a response to generate its own sort of various Apollo programs for 5G and other areas where it's quite behind. Now, I didn't anticipate the COVID, and the book just went to bed like 3 weeks ago. And I would say right now that the federal government and the Federal Reserve are going to be in the driver's seat and will be the determining marginal buyer and seller of most goods and services in the entire country for the next several years. And so everything that the U.S. has been trashing China for, for the last, 3 years is precisely what's being done right now. So the COVID thing, the biggest change, historical change going forward is that this is going to be a gloves off on, capitalism on the way up, socialism on the way down. And so a lot of the U.S. economy is being socialized through emergency measures, and these, 5G and other areas where the U.S. is quite a bit behind China are going to not be, they're going to be recipients of this funding as well. Massive, massive dollars. But at the same time, as Robbie was saying, there's been very profound, even right in the middle of the COVID thing in China, China's been pushing ahead very aggressively with all kinds of regulatory moves that are very bold and have great imagination. And so even today, I'm not sure if you saw it, but today, China established a blockchain consortium to standardize all blockchain in the country with, all the usual suspects, Alibaba, Tencent, Baidu, JD, and the other characters. And so China is moving ahead at flank speed in all of this deregulation. One of the greatest things that we have learned about the US in this crisis is how backward so much of the technology. When you take all these kids out of school who are between 1st grade and 12th grade in America, you realize what percent of these kids do not have access to broadband or internet? 20% of American kids under the age of 18, between 6 and 18, have no access to broadband or internet. And that's just a disgrace when you have internet penetration and financial technology penetration in Korea, Singapore, Hong Kong, China, other economies in Asia that are in the 90s. And so this epidemic in America is uncovering a lot of deficiencies in the technological foundation of America that needs a really profound Apollo project.
Gotcha. Yeah. So I want to focus on one thing you said there, which is that, going forward, central banks are really going to be driving a lot of these economies, whether we like it or not. And so Robbie, I want to ask you about another a pre-pandemic hot topic, which is CBDC, so central bank digital currencies, for which obviously China and a lot of other countries have been, they've been kind of front runners here. And so, do you see these CBDC? Do you see the pandemic and the lockdown and the stimulus going out? Do you see these being accelerators for CBDCs? And how do you think, when and if they are pushed out, how do you think these CBDCs will affect these economies going forward?
Yeah, sure. So, I think there's two ways to look at CBDC. One is that it's a new way of conducting monetary policy. The second is that it's a new form of a payment system, right? And so I think that what this crisis is going to do, and what it is doing, is causing people to think about payment systems more and think about, why is it difficult to get cash into the hands of people? Putting all the policy aside and loan applications issues aside, fundamentally, the mechanism by which money can go from the state into an individual, how does that work, and how can that be made more efficient? Again, being agnostic about whether it should happen or how it should happen. The fundamental mechanics of it, how does that work? And so I think what you're seeing in the US is increasing discussion about ways in which that process, whether that be through cooperation with fintech companies, whether that be through a US version of a digital dollar. There's increasing discussion about that, surely. In China, it's been very fascinating to see how local governments have partnered with Alipay to issue coupons. And these coupons are used basically as local government level stimulus vouchers that are for movie theaters, or for buying a car, or for going to restaurants within that city, to kind of get the city economy back online. And so I think, taking it back to the CBDC level, I remain skeptical that you're going to see any major movement on CBDCs this year. And when I say major movement, I mean actually CBDC in the hands of average normal people. Surely China is going to move forward with its CBDC pilot efforts. Certainly you're going to have more U.S. discussion in the U.S. about CBDC. But because of the monetary angle, the monetary policy angle of CBDC, when you're starting to talk about an M0 replacement, that's a fundamental shift in how monetary policy is conducted. And I wouldn't blame any policymaker for wanting to be a bit slow to make such a fundamental shift. But when you're talking about central banks looking into how payment systems can be made more effective, I think certainly this is going to cause folks to look into that. One side note to all this, right, is someone mentioned this earlier, how this whole event is causing, is really highlighting the dominance of the U.S. dollar. And so I think that that's another issue that's related to payments, right? Because if you start to have more and more cross-border financial transactions conducted in U.S. dollars, and you start to have more and more trade flows conducted in U.S. dollars, and that this trade invoicing, using U.S. dollars, then I think it could have it could have the effect ultimately of causing some of these entities in Europe and in Asia that have had some frustrations with U.S. dollar denominated payment systems to accelerate their exploration in how to build out alternatives. And indeed, just several days ago, last week, during quarantine, days and weeks blur together, as I'm sure people sympathize with. But very recently, the Bank of France put out a request for proposal on building out a kind of institutional level CBDC, and that really, I think, reflects frustration in Europe with regards to the heavy reliance on U.S. influenced payment systems. So it will be very interesting to see how this crisis affects the dominance of the U.S. dollar, and so far it seems that it's certainly going to have an effect where it increases the U.S. dollar dominance. Two, the effect on partnerships between fintech companies and governments in regarding how to get that money in the hands of people quickly. And I think these stimulus programs in China are illustrative of that. And I think you're going to start to see in the U.S. more and more discussions of how that can happen. And three, just kind of discussions as to what the kind of 3-4 years from now, CBDC would look like, and what are the costs and benefits of that. I think you'll see more and more of that happening as well, but not the short-term implementation.
We have 5 more minutes. Sorry, interruption over there. We have 5 more minutes. We're running a little bit over there, but could you ask some of the audience asking us, what is these gentlemen from South Africa, Tokyo, yourself, and China and Singapore, what is their predictions? I mean, if the last one was the audience actually asking question, then we have to kind of go to the next panel. Thank you. Go ahead, start with you, Maomao.
Go ahead, let me check out this question.
Yeah, it was a question came through our email, basically.
Okay, so what's the projections for these economies?
Yeah, what's the
forward?
projection, you guys, whether that's what you see over there? I mean, everybody has them. When I have everyone, you guys are different places. Everybody are hopefully optimistic. I am optimistic, but a lot of people are optimistic, but not in the short term, maybe in long term. What you guys there? What do you see there?
Yeah, so I've been on the phone all day with people in China, just for my clients and seeing what's up. I think China is getting back to normal. I don't know why is there like a great debate about this? China is normalizing. And what is a problem is like what happened the other day with a flight from Russia to Shanghai, which would have had about 180 or 190 people, and 51 people tested positive. Russia is very problematic, and so the Russia-Chinese border is very problematic. I think Russia is dramatically underreporting what's going on. I think that the person to follow on this is Neil Kashkari of the Minneapolis Fed. He's talking about a rolling recovery, and I think that's it. Because Singapore is all about testing, tracing, quarantine, finding clusters, testing, tracing, quarantine, testing, tracing, quarantine. We're going to be doing this for 2 more years, but I am fairly confident. This week I've begun to be more confident that we're going to start to get a little bit of a let up. Spain and Italy, the numbers are going down. I think in the case of most of the Far East, we're all locked down until the 5th of May. But I think that, we're starting to see cases, stabilize all over the region. And so I'm confident for the first time since this whole nightmare began that humans we adapt, we have hope, we are designed to hope. And so I'm confident now that we're going to start to get out of this by having a rolling recovery, especially in countries with centralized lockdowns. America scares me because we have 50 different rules on lockdowns and there's no central organization. That's very problematic. And so
yeah.
I think Europe.
Actually, yeah. No, thanks, Paul. Because actually, I listened to the Kashkarian, Neil Kashkarian. As for those of the people, actually, I highly recommend to watch the video. He had the interview with Meet the Press just last Sunday. And I saw that video. He was the architect of the 2008 recovery, and he had some good steps over there. But it was very realistic what he was talking about. So the audience actually out there, just seek for the Kashkarian Meet the Press. He was there just last Sunday. Scott, very shortly, we're running out of time, so appreciate, Paul. What is your quick projections about that?
Yeah, my reflection is that specifically when it comes to investing, the fundamentals don't change, and markets go in cycles. Coronavirus, in my opinion, the market was looking for a correction. It was a bubble waiting to burst. It was just the corona was the pinprick. And the fundamentals don't change. And I think really when it comes to investors, they need to understand that to start off with. The other thing is that people move 4 times more away from pain than they do towards pleasure. And so when you're in these times of crisis is when social change happens. And they talk a lot about the adoption curve. And when it comes to technology and online investment and online collaboration, they've all been nice to haves. All us early adopters have been playing over there like the early 90s with cell phones. And what this is creating, working from home, being on Zoom. Most people have never used Zoom. Zoom's gone from 10 million to 200 million customers in 3 months. And it's going to force us up the adoption curve. And I think 10 years from now, we'll look back. This will be a catalytic event that will be good for the world, not bad for the world. It'll help us create the world we want. And the correction around the world in stock markets and every other investment asset class was coming anyway. People should have been preparing for it.
Thanks. And Robbie? Very quick.
Yeah. I mean, I guess I mean, so I can't speak to the on the ground in China right now because I left China for Chinese New Year, and it's been the Chinese New Year that never ended. But I would say that I am a bit more pessimistic. I think I worry a lot about the. I mean, you look at how much of whether it be global supply chains or whether it be the financial system. That's very reliant on, cash flows coming at a certain date, and those cash flows then being used to pay off a loan. And if you look at kind of how consumer credit levels have gone up in China recently, if you look in the U.S., the problems facing mortgage servicers right now, I worry a lot that yes, even if we get the testing and we can kind of go back to a somewhat normal. I do worry about what if this does have a fundamental influence on how people are conducting their daily lives, even if they are able to go back to a somewhat normal daily life. I think we're talking about a pretty substantial reorganization of the economic order in the short to medium term, and that's going to hurt some people, and it's going to hurt those people a lot. And I think what the overall effect that is on policymakers is going to be pretty important to watch.
Thank you. Maomao, in 1 minute, finalized. And thank you, by the way, putting this panel together. You're a good friend, and we appreciate you, all of you guys being here, Scott. And we haven't seen for this good way we all meet today, and appreciate you helping to this, and I kind of let us know about what's going on everywhere. So now 1 minute. I think I took
thanks,
a second of your minute.
Yeah, every time you have me do it in 1 minute or two. But yeah, so I just want to bring up one thing, which I don't think I've heard on this panel yet. So, and that's political risk. And so, going forward, Asia is heavily reliant on three drivers: it's manufacturing, is increasingly tourism, and then it's kind of foreign or government investment. And so these kind of things kind of drive the economy for a lot of Asian countries. And so before, you already saw this brutal race to the bottom in terms of the lowest kind of cost of manufacturing. Plus, as we kind of all the coronavirus has pushed another huge event this year, which were the humongous fires in Australia and Indonesia, kind of out of our minds, and the Amazon. And so climate change is happening. This race to the bottom, I think, will incur more robotic automation, which will put a lot of people out of jobs. And so you have reduced agriculture, you have more brittle supply chains, you have possibly less jobs just going around, period. I think all these things might lead to increased political risk and instability. And when that happens, kind of all bets are off the table. And so, and I don't,